in Washington. Well, when it comes to markets, my next guest warns us to be cautious about the investment timeline. She reminds us that tariffs continue to cause volatility and uncertainty. Let's bring in Neela White, Senior Portfolio Manager at Raymond James. She's here with me in the studio. Neela, thanks for coming in.
Happy to be here.
What's your take on markets these days? We've had a good, despite all the tariff talk, and that talk was very prominent before 2025 began. We have seen U.S. markets and the TSX trade higher this year, significantly higher. TSX up about 4% so far this year.
You know what? I think this has given us the opportunity, especially because the tariffs, we're looking at March, possibly the dates coming in. I think it provides a good time to start taking a bit of profits if you didn't in 2024. 2024 was a spectacular year, and I think you really need to look at your timeline. So, if you're converting your RSP to a RIF, if you're approaching retirement, if you have a big purchase on the horizon, a car, which will probably be more expensive now, a house. If you're going to university in September, you sort of have an idea of what the cost will be plus some. And I think it's just good to have that liquidity in place. So if there is a market pullback, if there is a recession, if there's a huge decline, you have the liquidity without having to sell in a declining market.
That's a great rundown of real life experiences that might cause people to sell, approaching retirement, approaching a big purchase like an automobile, heading to university. How should investors think about taking profit? When they look at their portfolio, they've got certain positions that are in positive territory. How do they choose? How do they think about that decision to sell some stock to take profit?
This is when the greed factor kicks in. Should I sell this, or is this going to be the big mover if anything happens? I would go for fundamental rules. Make sure that each position is no more than 5% of your account. Make sure each sector is properly weighted. And I'd look at the risk rating of the stock. So higher risk tends to be higher reward. Can you withstand that? Is that what's making your portfolio return, that higher risk name or line item? In which case I would look at reducing those and look for something that may be lower risk on the spectrum, but at least provides you solid growth, a dividend, has a good balance sheet, has a history of being able to withstand pullbacks.
You mentioned 5% as I think you mentioned it as a recommended maximum piece of a portfolio for any one stock. Do you believe investors should be looking at their portfolios regularly and trimming back regularly if a position like NVIDIA, for instance, gets to 7, 8, 9%?
Yes, I do. That's my personal feeling, just because there's nothing wrong with taking a profit. You can redirect the money later on. And there are other names out there, and I think what we end up seeing is we get caught up in this, everything that we see and hear, that we want to stay where we are, and then we have the regret of not selling when we had the opportunity. And I think this is a perfect example. When February 1st hit, first market day was February 3rd, we saw the market was down, that suddenly was like, I wish I had. We were given that reprieve. This is the time to react, I believe.
Okay, let's go to some stocks you like. One of them is in the medical technology field, Boston Scientific, and you hold this stock on behalf of clients, correct?
No, I hold it myself personally.
You hold it personally,
yes.
Okay. Why do you like Boston Scientific?
I think they have a very innovative portfolio. They're certainly in an industry that continues to grow and has legs. They have the tailwind behind them of the aging demographic as well. Their technologies are certainly quite cutting edge. They do a lot of lower risk, lower damage, cardiovascular technologies such as Feraplus, which is in the US and Europe, the Watchman, which helps prevent strokes, which is US and Europe. Another good thing about them is that their manufacturing is not going to be very much affected by tariffs. They don't have a lot of significant sourcing from Canada, China, or Mexico. And I think when we look at cardiovascular disease, by 2030, it's going to be the leading cause of death worldwide. Tailwind.
The company became famous decades ago for its medicated stents, which, of course, treat clogged arteries, to use a blunt expression. Okay, let's move on to another stock you like, Ensign Group. This is not the oil field services company of a very similar name in Canada. It's a nursing and rehab care services firm in the U.S.
Right. And again, it has a tailwind. It's the aging demographic. It has 363, I believe, properties across 17 states, skilled nursing facilities, senior housing, physio, occupational and speech therapies. So when we look at that whole demographic and the need for care and healthcare, people who are 65 today have a 70% chance of needing long-term care. That care has to come from somewhere, and it's not all family. Yeah.
And finally, Novo Nordisk, a very high-profile stock. It was once almost the Nvidia of the healthcare sector. Of course, the developer and seller of a drug used to treat diabetes 2, but most prominently, a very prominent weight loss treatment. And the stock has not done well over the past 6 months or so.
Yeah, recently they had a pullback. They came out with one of their drugs through a phase trial, the Cagri-Sema, which is also a weight loss drug similar to Wegovy. They had predicted a 25% target on weight loss, and it did between 20 and 22.7%. So they're pushing that out, doing a longer trial study until 2026. But again, another injectable, once-a-week injectables to add to their pipeline. They've had certainly a lot of other drugs in phase trials right now, again with obesity, weight loss, and diabetes. When we look at diabetes itself or weight gain, most cases are still not identified or treated. Worldwide, it is still a growing issue. 1.3 billion people will have diabetes in the next 30 years. So I think when we look at stocks like that, with tariffs coming in, it still has tailwind to support it just because human nature is human nature, and we will do what we want to do, thinking that there's a drug to help us through that.
Neela, thank you for joining us.
Thank you very much.
Neela White is Senior Portfolio Manager